Mic check 1 2. Mic check 1 2. It's now 2 o'clock, which means it's time for Tax Talk Tuesdays. And if you can hear me, can you just let me know? I see Pamela has joined. If you can hear me, Pamela, if you can do me a great favor, if you can just type in the comment section that you can hear me, that will be so helpful. I am so excited I'm always excited when I come to you at 2 o'clock because it's information that I'm going to be able to get to you. I've been studying this tax bill, still studying, and I want to make sure that, thank you, Pamela, for telling me you can hear me. For all the business entrepreneurs out there, I've been an entrepreneur for over a decade now, and I know, what it's like to try to run your business and try to keep up with the various laws. So any information that I can help you with, so to make your job easier, I certainly want to do that. Today I'm going to talk about a very important provision that was eliminated from this new tax bill that a lot of business owners, I see Brent has joined, I see Frederick has joined. Thank you guys so much for tuning in. So let me start by kind of giving a recap of what I've been doing the last couple of sessions. The last couple of sessions I've been talking to business owners, entrepreneurs, and I've been sharing with you some of the changes that happened this past tax session and the new law and how it impacts you as a business owner. Overall, I will say that I think now is a wonderful opportunity for you to be an entrepreneur in light of the additions or the revisions to the tax code. So last week we talked about how corporations have now the favorable flat tax rate of 21%. So if you're set up as a corporation, I certainly believe you're going to be able to save some money. If you're set up as a pass-through entity, pass-through entities are the sole proprietorships, the LLCs, the S-corps, the partnerships. You'll also get a favorable part of the tax code in that you get, in a lot of instances, you'll be able to qualify for an additional 20% deduction. So if you're just joining me, I was just giving a recap of the things that I've shared the last two sessions. So I see a couple of more people have joined. Colleen has joined, Maurice Johnson, George Pettiford. These are some of my folks in North Carolina. So thank you guys so much. I know some of you guys are entrepreneurs, and so you want to tune in today because there was one big provision that as tax professionals, as entrepreneurs, that we absolutely hated that Congress did. And it has to do, obviously, it has to do with the entertainment deduction as well as the meals deductions. But before I get into that, I want to share with you a little bit about who I am. My name is Beverly Winstead. I am a tax resolutions attorney. So what does that mean? It means that I help people that typically have problems with the IRS. They can owe IRS money. So I work to try to negotiate a settlement with the IRS. The other thing I do is if they want to dispute whatever IRS is trying to do to them during an audit, I can represent you in an audit, as well as if you want to go to tax court to contest what IRS is doing. I also represent clients in that arena. And for those of you who aren't in trouble, a lot of what I do is actually tax planning. I help you to figure out what's the best way that you'll be able to reduce your overall tax bill. And with this new tax law, I've actually been sitting down and talking to a lot of businesses and strategizing with them to be able to figure out how we can reduce their overall tax bill. I see Maurice just said he's an owner operator, so you need this information. Absolutely, I'm going to give you something, something that I believe that will benefit you today. And speaking of benefiting you, if you hear something that you think will be beneficial for other people, if you don't mind, if you can just hit the share button. One thing they say birds of a feather flock together. As entrepreneurs, we tend to flock or hang around other entrepreneurs because we know what challenges we face. and we're able to kind of bounce the energy off of that other entrepreneur and maybe do some problem solving. So if you know an entrepreneur out there that really needs this information, it would be great if you hit the share button. I see a couple of more people join. Sylvester Bailey, thank you so much for joining. D Keys, he's the man right there that's in basketball land, teaching the young guys how to play basketball down in Virginia. So thank you for joining. And Rod Williams. Okay, so this is, as I have indicated all through the month of February, it's Black History Month. And this is actually the last Tuesday in February. So what I've been doing every Tuesday is taking time to honor a historical African-American entrepreneur. Today, I'm going to honor, I'm going to honor Thomas Jennings. Thomas Jennings was actually the first African-American to earn a patent, and he earned it in the 1820s. He was a dry cleaning. He had a dry cleaning business and a tailoring business. And he did, again, something that was unprecedented in the 1820s. So I just wanted to take some time to honor him. I see my girl Sandra Douglas has joined. Thank you so much. She's a wonderful attorney. If you need any assistance with personal injury or family law, divorce, Sandra, if you put your information in the comment section, they know to reach out to you. Everett Country Boy Motley, thank you so much for joining. Okay. All right. So let's talk about what Congress actually did with this tax bill. So I've shared with you some of the things they eliminated. I shared with you that they eliminated the moving expense. They eliminated the unreimbursed employee expenses, which is going to hurt a lot of people, I believe, that are used to taking the unreimbursed employee expenses, things like union dues, things like professional subscriptions, things like travel back and forth gas. You no longer will be able to deduct the unreimbursed employee expenses. So those things are gone. So let's talk about this, what happened with the business. Again, let me qualify this because I said I think still it's a wonderful time to be a business owner. One of the major changes in the tax code, though, is that you are no longer able to deduct entertainment expenses. So why is that important? It's important because as an entrepreneur, and again, I said I've been doing this for over a decade. One of the things they tell you is that deals are done, let's say, on a golf course. I went out, bought my golf clubs. Many of you know I play golf, and I have been able to use that to go out and maybe secure some, contracts, some business clients, or, in some instances also build relationships with people. But under this new law, you can no longer deduct the entertainment expenses. That's important because it's funny because I got a call this morning. I actually had planned to talk about something else, but I got a call this morning from a colleague who said he was going to Vegas. Okay, Brent, yeah. Said he was going to Vegas, and he wanted to know whether or not he could deduct the business expenses. And, what I shared with him is that travel, the airfare, the plane fare, you absolutely can deduct. You can deduct it. Since you're going out, you're going to meet with a client. And the test actually is that it has to be, whatever your meeting is, has to be substantially related to business. It has to be something that you will be able to maybe generate revenue or profit from out of that particular meeting. So the travel, you absolutely can deduct. The airfare, if you go out and you rent a car, should be able to deduct that. Here's where it gets a little tricky. The meals. So we know the entertainment expense is gone. So let's say if you went out to Vegas and you decided that you wanted to maybe try to meet with a client, and in addition to you meeting with a client, you go to a show. Vegas is known for shows, right? So the actual going of the show is not deductible. It is no longer deductible. In 2017, it was deductible. Now the question is the meals. Are the meals deductible? So we've been going back and forth, a lot of different tax scholars. Originally, some people were saying that no, they didn't think the meals were going to be deductible. But the more and more I research this and the more I look at it, it looks like the meals actually are going to be deductible, but the way they are deducted is no longer 100% deductible expense. It's now going to be 50%. Again, under the old law, it was travel meals. You could deduct 100% of it. But the way the code reads, this new edition, is that you can fully deduct the airfare, things like that, but you won't be able to deduct fully the meals. So yes, absolutely, I want you to eat. So the meals are going to be 50% deductible. All right. The other thing is when it comes down to meals, because meals actually are a huge expense for business. Well, for some business owners, it can be a huge expense. So the question is, what happens when I throw that office holiday party, which I normally do once a year? Okay, Brent, I'm gonna get to you. All right, I'm gonna answer your question. All right, if I throw an office holiday party, the office holiday party is still 100% deductible. So you're able to deduct that. Let's say, Brent, you said if I pay with a credit card, do I need to keep the receipts? That's such a great question. You absolutely need to keep the receipts. The reason why is, and I've been to court on a particular case like this, is just because you have the credit card can say American Express, right? It can even say what, that you ate at, let's say, Ruth Chris. But the receipt actually shows what was ordered. And really on the receipt, you're supposed to write who you had that business meeting with and what was the purpose of the business meeting. So that's very important. You want to keep the receipts so that if you were ever to get audited, you would have, substantiation to be able to, that shows that you actually had that expense. So great question. Brent, I'm glad you're on. Brent actually is a wonderful business strategist. If you are interested in working with someone that can take your business from one level to the next level, Brent absolutely has helped. I know actually a couple of businesses. So Brent, when you get a moment, if you could just drop your contact information, Bold Vision Enterprises, in the comment section. Thank you so much. The other big part of meals is whether or not meals provided for the convenience of the employer is deductible. So let's say, so I do taxes, right? So I'm here, and there are often times where my staff and we work actually until about 8, 9 o'clock at night. So the question is, around 6 o'clock though, my staff, they begin to get hungry and they want something to eat. So what happens if I go out and I order pizza, and because they're still here so that we can continue working? How is that now treated under the new law, right? So under the old law, it was actually 100% deductible. I order pizzas, my staff, they take a 15-minute break. We continue to work after the break. It was 100% deductible. Now it's actually only 50% deductible. So why am I sharing this with you? Why am I sharing these kinds of things as a business owner? Because, actually for two reasons. Number one, it helps you to set your budget in terms of what it is that you actually are going to allocate funds to, right? So if I now know that I can no longer deduct entertainment, like I'm going to be a lot more discretionary in whether or not I will actually meet a client on the golf course. I still probably will, because again, that's where deals are done a lot of times. So, but I probably won't go as often. That's one thing. The other reason why is, I want you to, make sure that your bookkeeper understands what it is that they're doing so that they can set up your general ledger accounts correctly. All right, it's important that the meals that are 100% deductible be coded 100% deductible, and the meals that are 50% deductible will be coded 50% deductible, so that you can get the full benefit of what you're spending, or the tax benefit. Okay. I'm sorry, but I'm open for questions. If you guys have any questions, I will stay on another 2 minutes. If you have any questions, I'm more than happy to answer questions. I know it's a lot. I wanted to make sure I got this information to you so that you understand. Britt, did I answer your question? Okay. All right. It sounds like all the questions have been answered. Again, if you heard something that you thought was beneficial to somebody else, please hit the share button. And I will see you guys next week. Oh, this Thursday I will be on Sirius XM Radio, channel 141. And please tune in. It's called A Small Business Report at 12 noon. Thank you so much. Bye-bye.